With me is Ewout van Schaick, whose team has been winning award after award these couple of weeks. Ewout, welcome. Thank you for joining us. Now, I know that your multi-asset team is managing the First Class Yield Opportunities Fund. Mm-hmm. Can you elaborate on the fund's performance?
I'm very happy with the performance so far. As you probably know, the Yield Opportunities Fund is a total return strategy. Mm-hmm. And we aim to generate about 4% return over cash over a full credit cycle. Since the inception of the fund, about 7 months ago, mm-hmm. we have generated about 4.6% return, mm-hmm. which is already above the annual target. So I think I'm a happy manager.
So, happy manager, break it down into components. Which attribute to its success, you think?
Yeah, so far the allocation to high yield bonds has clearly contributed most to the fund's mm-hmm. performance. We have held the largest allocations in high yield since the inception of the fund, and we continue to do so. However, I think also our allocations to emerging market debt and to investment grade bonds have clearly played their role. Mm-hmm. Within investment grade bonds, mm-hmm. we prefer and we predominantly invest in BBB minus rated bonds, which still generally generate an attractive yield.
Mm-hmm. If we would be blessed with a glass-looking ball, what would you expect from the performance these next couple of weeks?
Yeah, over the short to medium-term horizon, we are still, I think, would say, relatively constructive on the mm-hmm. overall credit asset class. Mm-hmm. The visibility of the global economy and the recovery of the global economy, especially in developed markets, is strengthening. And at the same time, we see some of the tail risks in emerging markets fading. So yeah, generally I think that is a strong theme. Central banks keep on easing, keep on having an easing bias, and because of that also the search for yield theme that drives investors to the asset class seems to continue. Mm-hmm. And maybe as a last point, I think also technical factors still remain strong.
Mm-hmm. And everybody's always keen to hear about outlook. What is your outlook on the respective asset classes within this fund?
Yeah, if we look at the major asset classes in the fund, we still keep to be most constructive on high yield. We keep our largest allocations in high yield. I realized that the yields on the asset class since also the beginning of this year have mm-hmm. come in. But we do believe that there is further room for spreads to contract. Mm-hmm. If you look at companies, then we see that balance sheets generally are still very healthy, that default rates are very low. We see economic data is improving, mm-hmm. and also the flows to the asset class remain strong. Mm-hmm. Also, if we look at our own technical, more quantitative factors, they still support us for high yield. On the other hand, if you look, for example, at emerging market debt, we have become slightly more constructive, I would say, on a short to medium-term horizon. Although we also have to realize that the structural problems in emerging markets will take more time to solve. The economic data from China is still pretty weak. And also, of course, we keep a close eye on the developments in the Ukraine and Russia.
Mm-hmm. One final question for you. For which investor is this fund designed for?
Yeah, I think for any investor that is interested in a diversified portfolio of credits with a low to limited exposure to interest rate risk, this fund is a suitable solution. And many investors, as you probably know, are concerned about the prospect of rising interest rates, and at the same time they still need to generate an attractive yield on their fixed income portfolio. Not all investors have the skills, the capabilities, the resources available to create a diversified credit portfolio themselves. And so I think we can help them, and we can create a risk-controlled portfolio. We do create a risk-controlled portfolio of credit bonds with a good medium-term outlook. And I think that by combining that with a low exposure to interest rate, we can offer them an attractive solution.
Mm-hmm. Well, again, my congratulations for winning all these awards recently, and until we meet again.
Thank you very much.